the last two times we had declines in jobs and migration in LA, it was very bad for the local housing market. So you can bet that home prices are going to want to regress to the levels of where the fundamentals are at. And that means prices will be going down. And so we're going to get right into the data, everyone, because there is no time to waste in understanding the massive risk factors that are present in the Los Angeles housing market. And what we're looking at on this graph is a zip code level analysis of the Los Angeles metro housing market. And the data we're looking at here, guys, I want to be very clear. The data we're looking at is the percentage change in home prices that occurred in the housing crash from 2007 to 2012 in Los Angeles. I call that Housing Crash 2 in LA. It occurred from 2007 to 2012, and the market got absolutely destroyed. You can tell by all of the red on this map. All of the red means big home price declines. The metro area as a whole saw prices and values decline by 37%. And we can see scrolling in here to urban LA, neighborhoods like Watts, Willowbrook, Compton, Carson, all the way down to Long Beach. Some neighborhoods had even 50% declines in home prices over this 5-year period from 2007 to 2012. Now, many of these zip codes here along the I-110 corridor are more poverty-stricken. They had a lot more job losses during the last housing crash, more subprime loans, and so that's why they had such high declines in prices. However, if we go up to a wealthier neighborhood, we can see that wealthier neighborhoods also got hit very hard. For instance, 90291 in Venice Beach experienced a 30% decline in values from 2007 to 2012. We can see here the typical price went from 1.4 million to 1 million, a $420,000 decline in equity. Like, imagine that. Imagine if you were a homeowner or investor in Venice Beach who bought in 06-07. You would have then experienced a $400,000 decline in equity over the next 5 years, and you would have been underwater on your mortgage. And if you faced any financial or economic difficulties, you would have likely been foreclosed on. If we go further up north to Beverly Hills, the world famous 90210 zip code, one of the wealthiest, richest areas in America. This area also got hit hard. The typical price here went from 3.6 million in 07 to 2.8 million in 2012, a 23% decline and a massive reduction in wipeout of 850,000 in equity on the typical home. And so what we're looking at here, guys, is the fact that Los Angeles in the last housing crash, which I call Housing Crash 2 from 2007 to 2012, it got destroyed. And this is extremely important to understand if you're a potential home buyer or real estate investor looking to buy in LA right now heading into the fall of 2021, because we are in the largest housing bubble of all time. Since that Housing Crash 2, which ended in 2012, LA has had a big rebound in prices, and we're now back to a typical home price in LA of $830,000, which is the highest it's ever been. So if you are a home buyer or real estate investor buying in LA right now, know that you're buying at the peak of a bubble, and that only 10 to 15 years ago, LA experienced a 35% decline in home prices more broadly and up to 50% in certain areas, and that no area was spared. Even the wealthy, rich neighborhoods also got hit very hard. This is a reality that I think a lot of people in Los Angeles who work in real estate want to hide from you, whether they be realtors or local investors. They want to tell you, they want you to think that somehow home prices in California and specifically Los Angeles can't go down, but as we just saw on that map, they can go down. And in fact, Los Angeles is actually one of the most volatile housing markets in America. And what do I mean by volatile? I mean that prices in LA are all over the place. They go way up, they go way down, they go up again, they go down again. And you can see that on this graph, which is looking at the year-over-year percentage change in home prices in LA going back to the late 80s. This is data that comes from the Shiller Home Price Index. And just look at how up and down this graph is. We have periods like in the early 90s where prices go down by 11%, then they go up by 33% in 04, then they go down by 28% in 08, then they go up by 22% in 2013, they go up by 19% in 2021. And what I think you guys are probably noticing on this graph is that despite the volatility, there's actually kind of a consistent trend here, and that's that LA seems to have kind of extended downtrends in housing like it did from 1990 to 1996. Home prices over this 5 to 6 year period went down by 25%. I call this housing crash 1 in LA from 1990 to 1996. There's a 25% decline. And then basically over the next 10 years, we had a big bull market in LA real estate. If you guys are enjoying the data in this video and you want to see more of this real estate driven content going forward, there's one thing you can do to help ensure that. Hit the like button. When you hit the like button, that gets me more exposure on YouTube. And when I get more exposure, I can actually devote more time to these videos in the future, produce more of this content. So make sure to smash that like button. Additionally, make sure to leave a comment. I want to hear what your perspective is, especially if you're in LA as a home buyer, real estate investor, or renter. What are you seeing in the market? When you guys comment, it makes these videos better. All right, let's get back to it. But then that bull market ended in 07, and then we had another 5-year housing crash from 07 to 2012, which is housing crash 2, a 37% decline, which is what I showed you on the previous map by zip code. But then since 2012, we've now entered another bull market in LA real estate that's now reaching that kind of 10-year duration. So the real question here is, with home prices shooting back up in LA over the last year or two, are we at the peak of another housing bubble in Los Angeles? And are we going to see housing crash 3 coming very quickly around the corner? And there's really two ways to answer and analyze this question regarding housing crash 3 being around the corner. The first is from a really data-driven and meticulous angle, and the second is from a more like observational angle. And we'll start with that second perspective first, observationally. Home prices in Los Angeles are back to record highs. The typical price through July 2021 is $837,000 for a home in the LA metro, which includes Los Angeles County and Orange County. $837,000, that's the third highest in America. It's the highest it's ever been in LA, and that's for the typical home. That's not for a nice home. That's not for a home in a nice neighborhood. That's just the standard home. Very often something that's like 1,000 square feet, maybe only one bathroom, you're paying $830,000 to $850,000 for. You can see some images on the screen of what that typical home in LA at the typical price point looks like right now. And just by looking at that, you know that fundamentally this doesn't make much sense. Who can actually afford to buy these kind of, let's be honest, crappy properties for $850,000 when the average wage across the Los Angeles metro area is $35 an hour, according to the Bureau of Labor Statistics? We have an average wage of $35 an hour. We have a typical home price of $850,000 for a crappy property that gives you one bathroom and 2 bedrooms. That just doesn't observationally make sense. And from that perspective, yeah, I think prices are declining in LA. However, if we want to even get further into the data, things look even worse when you start to consider what the fundamental drivers are of real estate demand in a market. Like, ask yourself that question. What fundamentally determines home prices? Well, it's the supply and demand of real estate, right? How many homes and apartments are available and being built versus how many new jobs are being created, how many people are moving to an area, how much money they're making. And that situation for Los Angeles looks really, really bad right now. And let me show you what I'm talking about. And these two lines really tell the entire story about Los Angeles's deteriorating housing fundamentals over the last 3 decades. And let me explain what they mean. The green line is the natural increase in the Los Angeles metro area population over the last 30 years. And what's natural increase? That's when you take the number of births in a given year and subtract the number of deaths. So we can see back in the early 90s, LA was organically growing its population, births minus deaths, by about 180,000 a year. But that has just been on a consistent downward trajectory over the last 3 decades, all the way down to only plus 46,000 in 2020. So we are in a long-term demographic and growth decline in Los Angeles from an organic, natural viewpoint. And why is this happening? Well, it's pretty simple. LA is getting older. The number of births is plummeting. The number of deaths is increasing. And that's very bad for the fundamentals of the housing market in the long term. But what really concerns me about LA's housing market fundamentals is the blue line, which measures the total net migration into and out of the LA metro, how many people are moving in minus how many people are moving out. And from this, you can see that generally speaking, LA is a negative migration metro. More people are moving out than moving in. That's why these numbers are typically negative. In fact, there's only been 4 years out of the last 3 decades, late 90s, around early 2000s, when LA had positive inward migration. Every other year, it's been negative. It's just a question of how negative it is. And what I think sticks out to you guys here is that there's actually a cyclical trend to the migration in LA. Once every 10 years or so, there's a big dip in migration. It occurred first in the early 90s to mid 90s. We can see from like 92 all the way to 94, 95, we had a big dip in migration. Then it kind of bounced up to more even levels. But then we had another big dip in migration, 05, 06, 07, 08. Then we had a more even level for the next 5-7 years. And now we're in another big downward trend in migration, 2020, 2021. And this is a big problem for Los Angeles' housing market, this outward migration trend we're seeing, this cyclical outward migration trend, because it means more and more people are leaving the city. That's going to decrease the demand for homes and apartments and naturally lead to declines in prices and rents. And it's no accident that the last 2 times that we had this cyclical migration downtrend, the early 90s and the mid 2000s, those were associated with declines in home prices in LA both times. So if history is going to repeat itself, LA with this negative downtrend in migration is also going to see a decline in home prices. And then when you combine that downtrend in migration with the fact that the natural growth of LA's population is at its lowest level ever right now, you start seeing how the actual fundamentals of demand for housing in LA are at their weakest point of all time right now in 2021, while home prices are at an all-time high. That's a bad combination. That's a risky combination for you as a home buyer or investor buying into the market today. It suggests that if you buy today at peak prices, in 1 to 2 or even maybe 3 years, you could have a big problem on your hands, the value of your investment going down by 10, 20, 30, maybe even 40%, depending on the neighborhood that you buy in. But wait, guys, there's more. Not only is Los Angeles declining demographically, it's also declining economically right now. A lot of businesses are leaving LA, a lot of jobs are leaving LA, and as a result, it's actually in the midst of a massive recession here entering the fall of 2021. Let me show you what I'm talking about. And if you want to understand the economy, all you got to do is look at jobs. Where are jobs going? And that's what we're looking at on this graph, the percentage change in jobs across the Los Angeles metro area over the last 3 decades. And we're looking at that percentage change in jobs over an 18-month period. And we can see here that in July 2021, LA is down 7.6% on its job count from where it was 18 months prior, right before the pandemic, meaning that LA has shed about 480,000 jobs over the last 18 months. That is massive. That is really bad. That is a recession. When your economy is down 8% on its job count, that is a deep recession. And you can see this actually roughly matches the decline in jobs that LA had in 08, 09, 2010, which was known as the worst recession that the U.S. has experienced in 50, 60, 70 years back then. Well, our job decline today matches the job decline back then. Interestingly, this job decline in 09-2010 corresponded with housing crash 2, when home prices declined by 37%. So just remember that. 8.1% decline in jobs, 37% decline in home prices. We have a similar decline in jobs today. We also see another decline in jobs that occurred in the early 90s, peaked at 5.7%, and this corresponded with housing crash 1 in the early to mid 90s. We had a 5.7% decline in jobs. Home prices declined by about 25%. So you can see that the state of LA's economy right now is one of the worst states it's been in the last 3 decades. And that the other 2 times in the last 3 decades when LA's economy was kind of close to similar conditions, we had a big housing crash. And so this is super interesting, right? We're looking at the fundamentals in Los Angeles, the job levels, the population growth levels, the migration levels. They are all trending in a negative direction for LA. In a negative direction. And these are the things that fundamentally determine home prices in the long run. They're all going in a negative direction, just as home prices are reaching all-time highs in LA. What do you think that means for the future of the LA housing market, especially if you're a home buyer or investor looking in LA today? I can tell you it's not good, especially because the last two times we had declines in jobs and migration in LA, it was very bad for the local housing market. So you can bet that home prices are going to want to regress to the levels of where the fundamentals are at. And that means prices will be going down. How much are they going to be going down? Maybe it's hard to predict. I think 20 to 30% on average across the LA metro. And maybe again, you see certain areas, more high poverty areas, people who are more kind of economically disenfranchised. Those areas probably going to have higher percentage declines, maybe around 40%. Some of the wealthy areas might only be 15%. I don't know, this is me speculating, but I think we all know by looking at this data that the future of LA's housing market is not good. You have to rely on some really extraordinary assumptions to try to assume that prices won't go down. I think one of the things people might say in response is that, oh, the fundamentals in LA don't matter because there's so much foreign demand. That's one thing I see a lot of people say. It doesn't matter what the demand in the US is related to jobs and migration because there'll be an investor from China that's just going to scoop up a property in LA. I think something like that does happen. I think there are a lot of foreign investors, but actually the levels of foreign investment, especially from China in America's real estate market, are at their lowest levels in over a decade. Right now. I actually covered this in a previous video using data from the National Association of Realtors on foreign buyers. Foreign buyers are at their lowest level in a decade right now in the US housing market. So I don't think I'd want to rely on that demand to fundamentally support home prices in Los Angeles, especially when we have such a consistent history of LA being a volatile market where prices shoot up, then they go down, then they shoot up, then they go down. And it's just really important to remember that if you're someone who's a buyer or investor today, you're trying to make the decision, should I buy now or should I wait? Just understand what LA's housing market is. It's volatile, and it's volatile with underlying fundamentals which are going in the wrong direction. If it were me, I wouldn't touch LA's housing market with a 10-foot pole right now. I wouldn't buy anything because I think prices are going down. And in fact, the median list price in Los Angeles has gone down now 5 months in a row, according to data from Realtor.com. So we might already be seeing housing crash number 3 in motion in Los Angeles right now. Housing crash number 3. Number 1, again, occurred from 91 to 96. Number 2 occurred from 07 to 2012. Number 3 could be starting right now. And if LA's history is any indication, it could be lasting for 3, 4, or even 5 years. And I know this video is pretty cynical, pretty negative on LA, and I promise I'm not trying to be negative on purpose. It's just when you look at the data, it's kind of hard to not draw a negative conclusion. Declining population, declining migration, declining jobs. All of that happening as home prices are at all-time highs in Los Angeles. Oh, and by the way, Gavin Newsom just signed some new legislation, SB 9, which is going to dramatically increase the level of home and apartment production across California, including LA. So we're going to have supply going up significantly over the next couple of years as well. That's a nasty cocktail for the future of LA's housing market. And I hope that all you guys, if you're a home buyer, real estate investor, you take this data into consideration when you make your decision. Now, if you guys do appreciate this data, if you did like this video, all I ask is make sure you're a subscriber. I come out with 3 of these data-driven videos per week on different markets across the country. I do a lot of these regional deep dives, so if you want to see me cover another market, make sure to leave a comment, like the video first, and then make sure to leave a comment and let me know what market you want me to cover. You guys will also want to think about becoming a channel member. You can hit the join button below to do it. The cost is $5 a month, and you get some very cool perks. The first is an exclusive community board here on YouTube where I make exclusive posts using data, graphs, maps, only visible to US channel members. Additionally, I will poll you guys, my members, and ask you what videos you think I should do in the future. So if you want to see that exclusive content and have a say in the future videos of this channel, think about becoming a member. Additionally, there's an exclusive members only newsletter that comes out once a month. You can see it on the screen right now. Has exclusive data across the entire US housing market, as well as my insights on the markets to target, the markets to avoid. So if you want that newsletter, exclusive access to the community board, think about becoming a member, hitting the join button. All right, guys, thanks for watching this video. I'll see you all next time.